futures, please. They got a little bit of green, not that much. David Nicholas is here. Look, David, it was a great week last week for stocks, especially Friday, up 800 on the Dow. Are we going up from here, do you think?
Yeah, Stuart, it was a great week, but when you look at the year so far, we've seen one of the worst 6 months for the markets in half a century. Now, that's been depressing for a lot of investors, but the silver lining is when we have the losses early in the year, like we've had it this year, generally, if you look at the last 90 years, every single time, the markets have been positive for the second half of the year. Saw this in 1932, saw this in 1940, saw this in 1962. We also saw it in 1970. So it's not that I think everything's great and that the economy and the world is in a great economic position, but if most investors think that we're heading towards economic doom, Stuart, if that doesn't materialize, you could see a really nice rally. So I think markets will head higher from here, and I think we end the year higher than where we're currently sitting.
Okay, talk to me about the second half of the year, which begins in the next few days. Who will be the big winners in the second half? Who are you betting on?
Stuart, I think investors need to look at financials. So we've got this unique situation right now where you've got rising earnings, but you've got falling valuations for financials. So when we see that interest rates are rising, I think we all believe rates are only going to continue to rise from here. That helps insurance companies because insurance companies invest in higher yielding bonds. That affects positively their investment income. But for banks, it's pretty simple. They're going to have a larger spread between deposits and what they can get for loans. So I think that the rate return right now for banks are really good. We did an analysis, Stuart. For every 1% rise in interest rates, that impacts a 24% growth to earnings in just the first year for banks. So if you look at a name like Bank of America, trading at 9 times earnings, 2.6% dividend. It's a name that we own. JP Morgan, trading at about 9 times earnings, a 3.4% dividend. I think those are two names that are going to do very well in the second half of this year.
All right, we'll check out the banks in the second half. Thanks very much indeed, David. We will see you again soon.